why did Canadian investors discover their love to German real estate so suddenly?
Love is a bit strong. I think Canadians like German real estate. In Canada, it's a relatively small country, but we have a crisis in terms of people trying to pay for their retirement, whether it's individuals or pension funds. There's not sufficient real estate for the capital that we have, so the capital's spreading out. The pension funds led, and a lot of pension funds have invested all over the world. And I think the diversification is desirable, plus the variety of properties. We created a specific vehicle, a public company, to raise money, we thought, from retail investors, independent advisors and retail investors to invest in this initial portfolio and invest around the world. It was successful in raising capital, and also it's a little surprising how many institutions wanted to invest as well. But I think the real interest is Canada has been doing better and better, and this is the first time you can sell a building in Canada at a lower yield and buy a building in Germany at a higher yield. And who knows what the future's like, but if the future's anything like what it's been, it'll get back to normal one day, and there'll be an opportunity to get good income and then some capital appreciation.
No, I think from the international perspective, Germany is always there. So Germany is core, and that's what. And Germany is on the other way sometimes boring core for international investors. That's what I learned over the last 15 years. But it's always there, is an important and big market in Europe. And so if people think about Europe, surely these days, especially about Germany. And so therefore, we were always concentrated. We are pure play, German commercial investment company. So we were always concentrated on Germany, because based on our philosophy, all business is local, and Germany is more local than other markets. It's the most diversified market in Europe. So you cannot compare it with France, driven by Paris, with UK driven by London. So we have 5 or 7 top cities, and we have a lot of interesting B cities out of the German federalism. So therefore I think Germany is always attractive for international investors, but it's a difficult market also for international investors.
But yes, this fits to what you said in an interview with Immobilien Manager. You expect more core plus investments in the second half of the year. What makes you think that?
I think we will see over time now a repricing, particularly in the core plus segment. I think so far the seller and buyer assumptions in terms of pricing has not really gotten to a point where we see significant amount of transactions. As said before, most of the transactions are in the core segment. But I think the core plus segment will reprice now over time, and will provide quite attractive opportunities, also in A cities, I think. Yeah, so certainly, and we had the discussion prior to the session here. Certainly, understanding Germany is quite difficult or complex, I would say, for international investors. Because yesterday evening I was, for example, sitting next to a Korean investor saying to me, "Shall I invest in Frankfurt?" And I said, "It's not that easy to say, shall I invest in Paris or shall I invest in London, for example?" The situation is you really need to understand the opportunity, and it could be in A city, or it could be in B city, really.
Financing at a moderate level is an important part of our strategy. We like to use about 50% debt, and for us, we're a new player, so we have to meet the various lenders and develop relationships. And we've been making progress, but maybe it's better than other European markets, but I do think that financing is an issue in the market right now.
Yeah, it's an issue of is the tension growing or easing?
I think it's very slow. So I think it's slow both in terms of the amount of new loans, as well as the amount of time it takes. And other mortgages are expiring, so I think it gets played out. I mean, the good news is that there's new capital coming into the market. So I'm not sure what happens with pricing of the assets, but I think that people are probably going to be looking at using more equity and getting a decent return on their equity and less reliant on debt.
Matthias, what Ulrich also said is that co-investment might be a good strategy because international investors look for co-investors. Is this a fact?
Absolutely, and we are seeing that investors talking to us are very interested that we co-invest with them when we do sizable transaction in Germany. I think for the investors it has the advantage that they basically go with an asset manager or investment manager that basically understands the market on the other side, provides a significant percentage into the transaction and basically shares the risk and also obviously the returns of such an investment. I think it's a very good strategy, starting with a number of the sovereign wealth funds are exactly doing that. They are setting up separate mandates, for example, and investing with asset managers in specific countries, and mainly they are seeking to co-invest with this investment asset manager in those countries.
Okay, the lack of leverage is there, of course. No, I don't think so. That opportunistic will come within the next year. Okay, we'll see. Many CMBS financings will come within the next 2-3 years. So perhaps there could be pressure on some portfolios that they have to sell at the end. But we'll see. But I think also for this CMBS there could be some refinancings, but on a lower level, and that could be the reason then that the transaction side will increase.
I think we answered it because we said we have to go into the deep. There is a certain risk. Not everything that is called core proved to be core in the past. We all know that, and there is a certain risk, and there is no risk-free asset class anymore, I think, and core isn't risk-free. If anybody thinks that, it's wrong, I think.
I think that the real question becomes, how much growth will there be, and will that lead to more take-up? If there isn't a lot of growth, then it's not just the office building. I don't think the retail buildings will be doing so well if there's high unemployment and very little income. And I'm not sure the computer consulting companies that are public, that you buy their shares, that they're going to be up. So I think the real question is, when you look at the asset, is it a good storehouse of value? Now, your position seems to be that we're going to have less tenants, that spaces are going to remain vacant or vacancies are going to increase. And if that's what you believe, then it may not be good for you to invest in office buildings.